On today's episode, we're talking about the different degrees of risk that come with running an agency. We'll cover what risk really means in an agency context, how to think about it using a simple matrix, and why the number one priority for every founder is just staying in business. Then, we'll dive into 9 high impact risks an agency can face and share how to prepare for each one.
Okay, Wook, so let's start by kind of talking about what risk is, right? Like a definition. So I think when we talk about this, we kind of decide to define risk as exposure to uncertainty that can materially impact a business, right? So I think that that's the lens through which we look at risk. Yeah, and maybe how should an agency kind of think about risk, maybe, maybe in a categorical form?
Yeah. So I think risk could be maybe 4 kind of broad areas. So people risk, client risk, financial risk, strategy, and kind of infrastructure risk. I would say kind of 5 buckets there.
Yeah, 5 buckets. In terms of like how we should maybe even go one step deeper in like, okay, there's these kinds of categories or kind of areas of risk, but there's risk in terms of how maybe impactful it is and how kind of infrequent they occur. And then also just how likely they might be. So maybe, yeah, maybe we could introduce this concept, a matrix, so to speak.
Yeah. So you can think of it as a risk matrix where, if you have like likelihood on the x-axis and impact on the y-axis. So as an example, what's a low impact event that has a high likelihood of happening? So for example, client pays an invoice late. That could happen pretty frequently, but overall impact to the business is pretty low. Or you have a low likelihood or high impact risk. So, for example, a client legal dispute. So, probably won't happen that often, but if it does, it has a pretty big impact on your business. So, yeah, just thinking about, the 4 kind of quadrants there.
Yeah. And so today, I think where we want to really focus our time talking about is just the risk that happens above that y-axis in terms of just higher impact. Because I think, I mean, obviously the low impact stuff, like these are just, you could almost think of them as annoyances that we got to kind of get through on a weekly basis. But it's really the stuff that's high impact that can put the business in jeopardy, the true risk of like, hey, going out of business. So we'll dive into that. Maybe you could kick it off with the first one.
Yep. The first one we'll call founder burnout. So the founder, especially for a smaller agency, has a very big impact on the stability of the business. So when a founder is either burning out or checking out or their focus isn't fully there, it puts the agency, overall at risk.
Yeah, and this could be a lot of things. Like maybe the founder has like a health issue, for example. So they like low energy or just they're unable physically to kind of contribute to the business or run the business properly. It could be some other things. Maybe they have, I don't know, certain kind of behavioral challenges. Maybe there's substance abuse, addictions or things like that can impact performance. And then that could also lead to burnout to some degree. But then there's also like things that are a bit more kind of mundane but real, right? And part of that might be like you're just not making enough money, and that could be a big source of burnout.
Yeah, I think the financial stability of the company could directly impact the mental well-being of the founder if they're putting in a lot of hours but not making money. Like that is a typical thing that happens.
So how do we help prevent or mitigate founder burnout?
Yeah, I guess starting at the end, paying yourself fairly as a founder and really budgeting for it in the company financials. Don't make it an afterthought of you're just taking whatever's left at the end. Just really think about what you need to survive and pay yourself, appropriately.
Yeah, and like a system, we follow this in the past as well as like a profit first is a good way, is a good starting point, especially if you struggle with this now. There's some frameworks that can help you kind of ladder up to paying yourself much better.
Yeah. Another one is if you find yourself working a lot, long hours, all of that, whatever you need to kind of build in your own recovery, whether that's time off, helping, really thinking about delegating some of the work that you have so that you're not working those long hours. Yeah, just thinking about from a kind of time management standpoint, how you could manage your day to day.
Yeah, definitely. Yeah, and add to that, just like adopting good habits, like eating well, sleeping well, just hanging out with people outside of work, perhaps the relationships aspect of it. Those all contribute to just better recovery.
Yep. Cool. Yeah. Another one is thinking about your network of peers. Their peers, even mentors or coaches who can really help you give perspective on your business. So it doesn't feel like you're in your own world. You have no one to talk to. And yeah, it feels like hopeless in certain points in time. So really getting that external perspective and community is helpful for a founder.
Yeah, and one thing we didn't really talk about as like a contributing factor to burnout is the, kind of the daily grind of like managing employees and clients. And so those interactions can, and also just the fact that as a leader, sometimes it feels a little isolating because like the relatability of the team might not be quite the same as if, if as a peer. And so I think that's, yeah, that kind of loneliness and like a feeling of being a little bit alienated in that way contributes to burnout. So yeah, you're absolutely right. These people, surrounding yourself with people who can relate, it makes a big difference.
Yeah. Yeah. And then if it's the feeling of being trapped is one of the things, just thinking about like what are the options you have? Like is it bring someone in to help run the business? Is it trying to exit yourself from the business? Like, yeah, not constraining the success of the business just by you as the founder.
Yeah, you're not stuck. Yeah, I'll do the
Yeah.
next one. This is a big risk, especially for agencies where there are multiple founders or even partners with varying degrees of ownership, let's say. And so, yeah, we call this like partner conflict or misalignment. And the big challenge here is like just yeah, having this like unresolved tension between the partners can really impact the business in a big way. So it might be the team sees the founders kind of bickering with each other or just kind of not getting along. That can impact morale. You end up making poor decisions. Sometimes you make decisions out of spite for each other. We've seen that. And also just, there's just like the silos and kind of distrust that kind of emanate from, just conflict or unresolved tension. And so, yeah, I mean, there's a lot, but then I think just tying it to risk more, going down the path of conflict, what's the worst that could happen? Maybe we could kind of talk about, yeah, what could this result in?
Yeah, beyond kind of the kind of unhealthiness day to day, I would say this could, and we see this where partners just can't get along, can't come to a consensus on things, and they just decide to part ways, right? Shut down an agency that previously may have been doing just fine financially, but just two or more people just can't work with each other.
Yeah, exactly. Probably it's kind of like, hey, we can't do this and let's just shut it all down. But in some cases, I guess somebody decides to buy someone else out. But then even then, when one of the partners, let's say it's two partners, one of them decides to like walk away, things can still go awry because I think the negotiations might take a turn. And so, yeah, we've heard such stories as well.
Yeah, thinking about ways to like mitigate this, right? Like, how do you prevent situation, at least prevent a catastrophic situation where an agency has to shut down because of this, right? One thing always starting with the legal aspect. So, do you have your operating agreement really tightly written where there is some kind of like buy sell mechanic built in where if a partner wants to leave, what's the mechanism for buying out the other partner at what valuation so that you're not like having that discussion when there is some conflict and emotions get hot.
It's kind of the equivalent of a prenup to some degree. It's kind of like, so to speak, married to your partner in going to business together. You've, with cooler heads at that time, if you can really outline the ways to dissolve a partnership or kind of go separate ways or have one person buy the other one out, I think that can save a lot of headache. But a lot of people skip this step. So I think this is one of those risks that you really got to look into early on.
Yeah, other things kind of come down to communication, just like making sure that you're touching base with your partners on a regular basis and really aligning on like, are we all marching towards the same vision? Are we all in it for the same reasons? And yeah, it's just ongoing, constant communication that isn't necessarily just about the work, clients or the employees. Like it's about more higher level.
Sometimes there are many, many partners who don't communicate on a regular basis. And this is why like frameworks like EOS are popular because it kind of installs and brings kind of systematizes the ongoing communication. And I think a lot of the
Mhm.
health of these relationships deteriorate because they just don't talk to each other enough and don't sync up often. And so I think it's so critical. Yeah, I think like luckily like you and I have been able to talk every day and not get sick of each other. And I think a big part of just like managing through and being aligned is the ongoing communication.
Another area is just thinking about role definition, especially when multiple partners. Just no, it's what are strengths or focus areas. Here's the aspect that you're handling. Here's the aspect that I'm handling. Obviously, there's going to be some overlap, but as long as there's a clear kind of role definition there, I think that's important.
Yeah, role definition. I mean, compensation is the other part. Yeah, just making sure like everyone feels good about what they're getting paid. Like sometimes I think a lot of partners default to just equal pay regardless. But then I think sometimes for whatever reason, resentments could creep up when one partner feels like they should be paid more. Just having those tough conversations and like just working through it. Because, and sometimes people have to set aside their egos and really kind of think about the greater good and the long term plan for these things.
Yeah. Sounds good. Thinking about mediation, and the last one we mentioned, like having a coach or mentors, like if things do go down this path, just having a third party to help facilitate a discussion. All right. Yeah, I'll tackle the next big bucket is key person dependency. So this is where the company has a heavy reliance on a single person or a few key people for core functions in the business. So sales, delivery operations. And it could be like the leadership, someone in the leadership team that's critical to everything functioning, or it could be key members of a project team or an account team that, let's say it's your largest account and the whole project team quits mid project, big risk for the company.
Yeah, 100%. I mean, it's all right. So, like mitigating this stuff, obviously, you want to have people who are cross trained and there's some like documentation of the processes so that like it's not a black box of like somebody owning the knowledge of everything. And I think that's a big one. And then I think like leadership succession plan, especially for the folks higher up, that's huge because it's kind of like, all right, if you have a COO or like somebody who's leading business development in the org that is going to be, it could be gone, like who can kind of take their place or at least take certain functions or responsibilities that person was in charge of, lower that blow.
Yeah. Worst case scenario of, let's say, one of the key people, if it's a founder, they pass away or they can't work, having some kind of insurance for the company to help replace that person as needed and hopefully smooth that over. But yeah, that's more for the leadership team usually.
Yeah, so that's I think that's like key man insurance typically is what you can have in place for certain folks in the org. Just for the audience, maybe you can explain how does that work typically? Like if somebody is incapacitated or like just kind of is unable to perform their duties, what happens there?
Yeah, it's usually a life insurance policy that the company takes out on the person. So the company owns the policy. So if a person passes away, it's usually combined with something called a buy-sell agreement. So like let's say it's a founder who owns a portion of the business. The insurance will be used to buy out their ownership stake from their family, and the other portion of the insurance is used to replace that person in the day-to-day running of the business. So yeah, it's the key man insurance that covers buy, sell, and operating the business.
Yeah, so that's usually like an amount that's enough to cover maybe like a year, 2 years of salary, would you say?
Yeah, exactly. It's whatever you think will be needed to replace the person from that portion, and then the buy sell is pegged more to the valuation of the company at that point.
Yeah. Okay.
Yeah. Mhm.
Cool. Just other ways to kind of mitigate this key person dependency as a risk is like distributing the client relationships as well, especially if there's, like the person plays a big role in owning a relationship. I think it makes sense to, have the client also have met and be aware of others who can kind of take over or manage that relationship in any circumstance or any departure. And then some other things that, you might want to mitigate against. I mean, it's kind of similar to the cross training, but also just like redundancy of skills and capabilities, right? Because in the scenario that you mentioned of like an entire project team quitting or like key people on an important project quitting, it's like you really want some backup there. Like you really want some folks maybe, and it could be in the form of contractors who kind of have those similar skills. It could be a vendor, like another firm that you can lean on. But like, these things happen. I mean, it's certainly happened to us. And it's really important to just have some backups in place.
Yeah, it's a high risk. It can turn into a much higher risk situation where you're supposed to deliver on a project and then you suddenly can't for whatever reason. And you have no knowledge of what happened in the past, and that puts you in a really tricky position.
Yeah, I'll take the next number 4. So this is like client side legal and delivery exposure. So it's kind of related to what we talked about. If key people leave projects or whatever, but like you're unable to deliver on a project, just any kind, but then beyond that, any kind of dispute with the client that can materially impact like profit, your reputation, which is incredibly important. And then also just like your resources, just kind of your focus as a leader. It's like if you have to deal with this big client problem, you're not going to be able to do other things. And so, yeah, I mean, a big one here is this idea of like errors and omissions, which there's insurance for. But like, yeah, when clients kind of make a formal claim of like, hey, like the stuff that you guys did or didn't do, like created damage for our business. And so there's a legal process they can initiate through that. I think other examples might be around scope, especially if you write vague SOWs or you never took the time or like had enough of a discussion and documentation around like what certain things in an SOW meant. I think that can lead to disputes that get to be pretty risky. And a couple other things like IP licensing disputes, as well as like just anytime there's improper use of client assets by an employee, that could also lead to some legal action. So yeah, so those are scary stuff. And like, I think we haven't been immune to this ourselves, and we've had to deal with certain kind of things where things escalated with clients. But yeah, what are ways that agencies can mitigate against this very kind of, this is as high impact and scary as it gets?
Yeah, since we're talking legal impact, where clients can claim quite a bit from lost business, et cetera, that go well beyond what you were paid as an agency to deliver the work. So I think it starts with having a really tight MSA, Master Services Agreement, where you outline a limitation of the liability that you're willing to take on as an agency. I think that is certainly something that gets discussed during the negotiation process, but setting a line saying the work that we're doing, you're paying us $10,000, like we shouldn't be on the hook for unlimited liability. Like if someone sues you for IP infringement for millions of dollars, like the agency was only paid 10,000 to do this work, we should be capped on what we're liable for.
Thanks for listening to Agency Habits Podcast. A quick heads up, Barrel Holdings is acquiring agencies. We look for profitable firms with durable revenue and strong teams. If you're thinking about succession, de-risking, or scaling with a partner, visit barrel-holdings.com to see our buy box and set up a confidential call. Thanks.
Yeah, and I've actually, observed you, when you're helping some of our Barrel Holdings agencies and reviewing kind of the MSAs with them. I think this stuff comes up a lot where I think a lot of it is, I think the clients kind of start at unlimited, kind of the liability kind of comes uncapped. And then I think we're very, I've seen you kind of push back on this. And in cases where you can't come to agreement, like, is it advisable for agencies to walk away altogether from this? Like, just what are your thoughts on kind of, how firm of a line should agencies draw? And like, what are some ways that you kind of still negotiate in a way that the client doesn't feel like it's too one-sided?
Yeah, part of it is understanding the work that you're doing for them and whether or not, what kind of claim. So if it's you're making like designing something like a deck that's used internally that it won't see the light of day externally, so no one could really sue the client for it, maybe you're willing to accept an uncapped limitation of liability or uncapped liability there. But if it is an area where somebody could sue the client really easily for ADA compliance and that type of stuff happens pretty often, then we should probably draw a hard line or even carve out specifically things that we will not cover in an SOW to kind of supplement what's in the MSA. But you also need to just take on the risk. Some larger companies just won't accept any limitation to it. And that's where kind of one of the earlier points you mentioned, having E&O, errors and omissions insurance could help, is saying, all right, our policy will cover us up to $3 to $5 million. Fine. We'll leave it on cap, hoping and kind of expecting that if something does happen, $3 to $5 million should be enough to cover us.
Yeah. Okay, those are great points. Okay, cool. So let's talk about some other ways that we could spend a lot of time on this because it's such a big risk. So other ways for client side, like legal and delivery exposure to be mitigated. I think signed scopes, change orders, approval logs, like these things help. Like if disputes arise, you can always point to like, hey, you agreed we agreed that this is exactly what we were going to do. And so kind of you can squash some disputes that way. You mentioned the E&O insurance, as well as like, I think, yeah, the documentation of different workflows. And then, yeah, what else? Like maybe this last point, yeah, you want to take this, like I think it's very important for kind of mitigating some of the risk with clients.
Yeah. If you basically, it's all about being transparent with the communication. If you foresee an issue coming, like let's say there's a feature that you said you would build, but for some reason you're unable to deliver it before you see it coming, you should have a conversation with the client saying, hey, we foresee this issue. How can we resolve this? Maybe we can reduce our scope and have someone else take it on, or a variety of ways to approach it. But what you don't want to happen is you kind of stumble your way through it, deliver a product that isn't quite exactly what you promised or agreed to, and then there's a conflict that needs to be resolved. Like, try to prevent it from the first place.
Yeah. I mean, one way to sum that up is like deliver bad news early. All right, let's do the next one.
Cool. The next one is on the employee side. So same kind of legal and compliance exposure there. So employment related lawsuits also could be as damaging as a kind of a client related lawsuit, from a reputation, from a financial impact standpoint, for kind of impacting your team perhaps. And ways that this typically can happen. So wrongful termination suits, if people felt they were, terminated for just reasons, harassment, discrimination, all kind of typical things that you hear about. Also, it may happen where contractors who feel they're misclassified should have been employees, those types of things happen. Or if people feel that they were paid incorrectly, so if there's wage disputes or PTO disputes, especially with like different states, termination, how you pay that. Those are all things. Some of these can be resolved, a lot more straightforward if it's just a pay issue. But if it's a wrongful termination, harassment, discrimination suit, those can be a lot more complicated.
Yeah, this is like, I think we're spending a lot of time on the previous one and this one because like this is, I think, where risk just seems the biggest, and like it could suck up a lot of mental energy. And talk about the first one of founder burnout. Like this is, if you have a lot of legal issues, like that's going to burn you out like nothing. And so, yeah, like I think mitigation wise, like we talk often about like just having a tight handbook, employee handbook, and just checking the boxes on the compliance side, making sure like you're following the different state laws, the federal laws that kind of around employment. So I think those are super huge. Is there insurance around this as well?
Yeah. So EPLI, Employment Practices Liability Insurance, where if you have a kind of payroll provider or you use a PEO to help kind of run your payroll, they probably offer this as a way to protect themselves as well. But if you don't have it or you're unsure, I would double check that you have this insurance.
Right. And then there's like the more of the blocking and tackling stuff of like, hey, make sure you think about having like a proper HR process and documentation around it. I mean, just even like good onboarding, providing people with the tools and things to do their work, just making sure they're aware of their responsibilities, who they're reporting to. I think like a lot of these things, what their benefits are, the proper, I mean, this all kind of ties back to the handbook as well, but like, do they actually know what the PTO policy is, or like some certain kind of conduct policies or anything of the sort, and just making sure those are all in place. And then I think maybe we could speak to a little bit of like performance management and feedback, because I think that like handled poorly can be a huge liability. So maybe you could speak to that.
It's kind of related to wrongful termination, where if people aren't clear why they're being terminated, let's say there's a performance issue, but it's a surprise and it comes out of nowhere and someone is terminated, that's like perfect grounds for a lawsuit incoming. It's all about having proactive performance management, where if there is an issue, or, if there isn't an issue and you're providing feedback for your team often and on a consistent basis, nothing should be a surprise if any action is taken in regards to termination.
That's so clutch, is like, just make sure you got that buttoned up, because at the end, I think where people feel the most wronged is when, they just feel blindsided, I think, and having process to avoid that as much as possible is going to protect you in a big way. Number 6, and I think the next few we can probably breeze through because they're important, but probably a bit more straightforward. So number 6 is business continuity and infrastructure risk. So this is stuff like cyber attacks, data breaches, or even natural disasters that just can interrupt work and make it hard to deliver on promised work for clients. We talk about, a lot like big companies have like business continuity plans in place. And so it's almost like you don't have to have overkill, but you do need to just plan accordingly and have some things in place. And then especially the cyber attack or like just kind of security stuff around data and things like that. I think basic things that you can do, cloud backups, password vaults, or even like 2FA, two-factor authentication is important. Is there insurance here too?
Yeah, there's definitely cyber insurance that helps cover situations like this. I remember speaking with an agency owner who had their computer physically hacked into, and the hacker accessed all the company bank accounts and wiped it all out. Where it's things that you don't normally think about in the day to day, but could be catastrophic. And imagine trying to talk to the bank and resolve that. You can't pay anyone, pay your team, etc. Yeah, cyber is, you don't think about it until it happens to you.
That's crazy. Yeah. And I think part of mitigating that is like just having a really strong like IT provider or somebody who can kind of help work through some of these issues. I think that's important. And then just going back to kind of the natural disasters or kind of interruptions in business, being able to do business, especially if you have a physical office too, and like you have people co-located or even let's say clusters of people in like areas that are impacted by natural disaster. I think having this kind of like what if business continuity like doc of like, okay, in the event XYZ people are impacted in an area or whatever, like is there allowances to kind of get them to a safer place and kind of allow for business continuity, or is there redundancy in the workforce to cover for them in those situations, et cetera? I think those things, it's like, when times are normal, like you don't tend to think about it, but like even spending an hour just kind of like mapping that out and doing the exercise can go a long way when it actually happens, because then you're not scrambling and you've actually put some more kind of rational thought to it.
Yeah. And also helping communicate that to your clients as well. So let's say some of your team is in an area, a big hurricane is coming through and everyone's talking about it. But if you never tell a client that, hey, I have a whole team here and they're probably going to be affected, it'll be a surprise. So just planning ahead and keeping everyone in the loop.
Yeah, that's good. Yeah. And just last one is like, is related to what we talked about, but yeah, just along the way, like is just, you have to keep in mind like the safety of the employees. And this is, I mean, it's both on the physical side, especially if you have office or like natural disasters impacting things, but also on the cyber security side. I mean, like how many times have we seen new employees get hit with like phishing attacks, right, on their personal phones, right? Of like people pretending to be me or you, or sometimes like being like, hey, like, can you go pick up a laptop and put on your personal card or what? Like, it's crazy. And I think those things need to be considered. And as you come across these patterns, like having orientation or just like information for folks so that they know to protect themselves, I think is super important.
Cool. All right. The next next risk is insolvency. So this is all about cash flow management, and even profitable agencies on paper could fail if you're not minding the cash and you don't have cash to really pay your team. So payroll or contractors. And if you miss payroll, that is like a downward spiral of losing trust and always feeling like you're on the back foot trying to catch up on the situation. So that can, yeah, cash flow management is a huge one. We actually did episode 6, where we went really deep into cash flow management at agencies. So this is a topic that, we spent a whole podcast talking about.
I'll just like zoom through some of the mitigation things. I mean, we talk about like, hey, maintain some degree, like a cash reserve, maybe 3 to 6 months, depending on what your business needs. And then also like looking at cash flow on a weekly basis, having a line of credit early, obviously do your client work profitably, because if you're not doing stuff profitably and you're paying out, cash is going to crunch really quickly. Yeah. And then just like collecting invoices on time, having good payment terms, like those things, super basic, but super important for it. And then lastly, like the timing of when you pay your bills plus when you receive bills, like make sure it's not upside down. It's either kind of matched up nicely, or preferably you receive your money a little bit earlier and then you pay a little bit later. Like just having that buffer can really help. Okay. The next risk is client concentration and dependency. So this is something we talk a lot about on the M&A side, right? When we're looking at agencies to acquire, we do always ask about client concentration. And the big reason being, like when you have a significant amount of your revenue tied up with a single client, or it's even worse, like a single work stream with that client, just the prospect of losing that client could lead to some significant damage, right? You might have to lay off big chunks of your team. You might go into debt. You like just all kinds of operational and financial challenges. And so Some of the things that we just look for a lot of times is like, hey, make sure no client is more than 20-25% of revenue. This is not always possible, but like, I think it makes sense for people to be aware of it. We've seen agencies where 50-70% of revs are tied up with one client. And part of the strategy has to be, okay, like how are you investing in business development to land and build up other accounts to kind of offset or kind of lower the percentage concentration you have in that big client. And then, and I think the other piece is just like making sure you're monitoring client satisfaction proactively and just getting ahead of it. Like just the worst is when you have a high concentration of client and then one day they come out of the blue and they go, hey, it's over. That could be quite devastating and like risk of huge proportions.
Yeah. And usually when you have a client that's that big in your company, it probably takes the attention of a lot of people. So I think, especially for the founder, a lot of energy goes to servicing that client. But yeah, you mentioned like business development, making sure that you're always thinking about how to increase or decrease that client's percentage on a relative basis is important. And the last risk here is strategic misalignment. So this is fundamental to the agency, whether you chose the right or wrong service offering or ICP. And if you think about this is the strategy at the highest level, what direction are you choosing? What client profile are you choosing to go after? What service offering you're investing in? And if you pick the wrong one, where it's an uphill climb and the industry, the market is kind of going in the opposite direction, it could really put you in a tough spot because you could spend years investing your team, your expertise, building up your brand and all your process in your company. But if the demand is decreasing while you're making those investments, you're just going to see, poor margins and decline in revenue.
Yeah, we've seen this felt, a lot, especially recently in the government and nonprofit sectors, especially like nonprofits that rely on government funding as well. And then government itself cutting back on spend. And so I think those kinds of companies are, and especially if they don't have other kind of areas that they can kind of lean on, it could be a tough period for them. Other things, maybe on the trend side, you could talk about.
Yeah, so a lot of trendy things, like NFTs were really hot and crypto. So you could have invested a lot of your team and your company direction into these areas that it's really hot for a moment and then dropped off really quickly. So that's a risk from a strategy perspective.
Yeah, definitely. And, like one thing to note is that like, certain industries go through cycles too. So it's not that like you can think about like maybe real estate or some of these firms that like you're going to have some hot periods followed by some cooler periods. And maybe that's okay. You can kind of build your business for that and kind of scale up and down as needed. But like, I think it's when you kind of enter a space without much like deep thinking and you just do it because you like it or something like that. I don't know. Like there's definitely a risk there that can kind of really impact the business. So like maybe we can talk a little bit about like how can agencies mitigate this kind of strategic misalignment?
Yeah. Some of this is making sure that you're tracking data against the work that you're doing. So whether it's by client profitability, the retention by and referral by ICP. So like, is the area that you're focused on, is it actually profitable and growing for you? Or are you trying to chase after business that's not quite there? Another area is just thinking about like industry tailwinds. So reviewing, just because you set your positioning one year, it doesn't mean it has to be the same every year following that. So just like taking a step back, seeing what the landscape in the industry looks like, and are there tailwinds helping grow that specific industry?
Yeah. And I think this is these 2 points that you made, I think it speaks to like, you can't always just be inward looking as in like, oh, we're going to focus on the craft and what we do. Like that's important, but you have to kind of look like a big part of strategy is understanding the competitive landscape you play in and what are the things you're going to do and not do. And essentially that's what strategy is like, kind of making those choices that then set the trajectory of your business.
Yeah. Definitely. And I guess one way as you kind of navigate this is thinking about smaller experiments. Like you don't have to go all in on everything all at once. Maybe trying it out, see if, there's momentum there and then slowly shift your agency in one way or another.
Yeah. And just as a like concrete example, like we're kind of seeing this with some of our firms where, big chunk of their work is designing and building websites, but we see some good demand coming from clients for, let's say, like the AEO, GEO type of optimization work. And so it's like running some experiments on, hey, like, can we try to service clients with that service offering, invest maybe first with contractors and then build up that capability and then go kind of deeper into that. So I think these things are, like definitely ways to mitigate strategic risk.
Yeah, definitely. Yeah. And these are the kind of risks that you may not feel immediately, where it could be over a long period of time. If, let's say, we went all in on websites, but then slowly over time, like the industry is moving away from that. Like if you don't experiment and think about new service offerings, like it's just going to cap your growth over a longer period of time.
Yep. Okay, great. So we made it. So these are 9, and it's a sampling of risks. I mean, it's not like comprehensive in every single risk out there, but these are the high impact ones. And so I think if you, as an agency owner, take steps to be like proactive and protect yourself from these types of risks, it kind of satisfies the most important thing, which is increasing the probability that you can survive the unexpected that come your way. So yeah, thank you all for joining. We'll see you next time.